Hello everyone, welcome back to another exercise tutorial for BUS 223 Financial Management course. We are still working on Chapter 3 problems, and in this particular video we're going to be looking at problem number 7. And it says, here are the 2015 and 2016 incomplete balance sheets for New Billy Oil Corp. Okay. And then we have the balance sheet data missing the shareholders' equity. Okay, we have the assets and the liabilities. Okay, we have two kinds of assets, current assets and net fixed assets. And for liabilities, we have current liabilities and long-term debt. Starting with the first requirement, A, what was shareholders' equity at the end of 2015? So again, to do this part, we're going to refer back to the shareholders formula derived from the basic accounting equation, right? And it says shareholders equity. And let's write it down here in the bottom. Shareholders equity is going to equal total assets minus total liabilities. Okay. So to figure this out, we need to first calculate the total assets and total liabilities, right? So I'm going to add an extra line here, just like we've done in the previous exercise, and we'll call it total assets. And here we will add total liabilities. Okay. Total assets of 2015. Again, the figures here are millions, but I will just keep them as they are for the sake of efficiency. So we'll say for 2015 current assets 310 plus 1,200, and that's a total of 1,510. Okay. For 2016, that's 420 plus 1,420, and that will be 1,840. Okay. For total liabilities of 2015, 210 plus 830, that's 1,040. And for 2016, 240 plus 920, that's 1,160. Okay. So now that we have the total assets and total liabilities figures for both 2015 and 2016, we can figure out the shareholders' equity for 2015 for Part A. Shareholders' equity for 2015. And that will be the total assets of 2015, which was 1,510, minus the total liabilities of 2015, right here, which is 1,040. Go back to our calculators. 1,510 minus 1,040. That's 470 million. $470 million. Okay. And that's Part A. Part B, what was shareholders' equity at the end of 2016? So again, shareholders' equity for 2016. We'll do the same, but this time we're going to use 2016 numbers. So the total assets, 1,840 1,840 minus the total liabilities, 1,160. Okay. 1,840 minus 1,160. That's going to be 680 million. All right. So that is the answer to part A and B. And then for part C, it says if Newable paid dividends of 100 million, of course, in 2016 and made no stock issues, what must have been net income during the year? Okay. So if we consider that the company have paid out this amount to their investors, okay, which is $100 million, then the question wants to know what was the net income for 2016. All right. Considering that the company have issued no stocks, no extra stocks, so there was no increase in shareholder equity because they sold new stocks, right? So that means that all the increase that occurred to the shareholders' equity was as a result of the company's retained earnings, right? And if we know the dividends and the retained earnings, we can deduce the net income from that, right? Because remember, we said that the financial managers take funds from investors, right? Use those funds to finance their projects and to operate the business, and then they make profits. Those profits are recorded in the net income. They take that net income, those profits, and they decide how much of that they're going to give back to the investors in the form of dividends, okay? And how much of that they want to keep in the business in the form of retained earnings, right? So if we know the dividends and the retained earnings, we can add those together and know how much was the net income. Okay. Now, we'll go back here and see from our answers in parts A and B, we can see that net income, or the shareholders' equity, have increased from 470 million in 2015 to 680 million. Okay, so that's an increase of approximately 210. Let me just double check. 680 minus 470. That's 210 million. Okay, so I'm gonna say net income is going to equal the dividends, plus retained earnings, or we could say the change in shareholders' equity. Okay, it's better to just word it as the change in shareholders' equity. Okay. Now the dividends was given to us in the question itself to be 100 million, right? So 100 million, that's a straightforward number, plus the change in shareholders' equity, we are going to have to calculate by the difference between the shareholders' equity of 2016 and the shareholders' equity of 2015. Okay, so we're going to say 680 million minus 470 million. Okay, so that means net income will equal 100 million plus 210 million. And that would be $310 million. Okay, I hope that is clear. That would be the answer to part C. Now let's move to the next part, part D. It says if Newable purchased 300 in fixed assets. The question is not clearly stating that the numbers are in millions here. They did say that here at the top, but it would have been better if here in the requirements itself they should clarify that this is in millions, but it's definitely in millions. So we're just going to assume that if Newable purchased $300 million in fixed assets during 2016, what must have been the depreciation charge on the income statement? Okay. Now, how can we figure this out? We can figure this out by the change in fixed assets. Okay. So here we have net fixed assets that have grown from 1,200 to 1,420. So that's an increase of 220. Okay. And because the question here is telling us that they have purchased fixed assets worth 300 million, and the change here is only 220 million, so that must mean that the difference between those numbers is what was charged to the depreciation expense account. Okay, so let's say part D, net fixed assets change equals 1,420 minus 1,200 . That is a change of 220 million. And the fixed assets purchased equals 300 million based on the information given to us. So that means the depreciation expense is equal to 300 million minus 220 million, and that is 80 million. Okay, I hope this part is clear. The company have purchased equipment worth 300 million. Okay, so if we neglect depreciation, what should happen? What should happen is that this account, the net fixed assets, will be increased from 1,200 or 1,200 million to 1,500 million, right? So instead of 1,200, it will be 1,500. But because it's not 1,500, it's less than that. It's 1,420. That means the difference here, the difference between 1,500 and 1,420 is what was reduced, or the amount that was reduced as a result of depreciation expense. Okay, this is how we figured this out. Okay, let's move to the second, or the next part E. Okay, what was the change in net working capital between 2015 and 2016? And this is simple. Here we're just going to calculate what was the net working capital in 2015, and then figure out the net working capital of 2016. Okay, and the net working capital, as you might remember from the previous exercise, let's write the formula first. Net working capital equals current assets minus current liabilities. Okay. Now let's find net working capital for 2015. The current assets of 2015 was 310, and the current liabilities 210. So here for 2015 it will be 310 million minus 210 million. Okay, and that equals 100 million. All right, and the net working capital for the following year, 2016, we're going to do the same thing, but this time we're going to use 2016 numbers. So the current assets 420, current liabilities 240. Okay, so 420 million, 420 million minus 240 million. Okay. $420 minus 240. And that would be 180 million. Okay. We haven't answered the requirement yet. We just calculated the net working capital of 2016 and 2015. The question, if you remember, the requirement is what was the change in net working capital between 2015 and 2016. So the change in net working capital equals 180 million, which was the net working capital of 2016, minus 100 million, which was the net working capital of 2015. So the change is $80 million. Okay? And that is the answer to part A. Next one, last one, part F. If Newell issued 200, again, they should clarify that it's in millions. If they issued 200 million of new long-term debt, how much debt must have been paid off during the year? Okay? Again, this needs you to take a deep breath, look at the numbers, and rationalize the answer. Okay? So let's see. Here we have long-term debt that have increased from 830 million to 920 million. Okay? Here they are telling us that Newell have issued 200 million of new long-term debt. Okay? So if we ignore the fact that the company have paid off any of their long-term debt, that means this number should increase from 830 million to 1 billion. What is it? 1 billion and 230, right? Which is 830 million plus 200 million. But as you can see, the long-term debt is actually less than that. So that means that the company have paid off some of their long-term debt. Now, how do we calculate how much they have paid off? You can work it out in multiple ways, but the way I'm going to do it, I'm going to add the 200 million to the 830 million, and then I'm going to subtract the 920 million. Okay? So let's do it. That's part F. The long-term debt was 830 million. Let's say the amount of long-term debt, debt paid off would equal 830 million plus 200 million minus 920 million. Okay. So 830 plus 200, that's 1030 minus 920, that's 110 million. So the amount of debt that the company must have paid off is 110 million, which is the amount that is reduced from the long-term debt after we consider the fact that the company have actually raised 200 million more in long-term debt. Okay, so the balance here should have came up to be 1,030, or actually 1,030 million, but actually as reflected in their balance sheet, we see that the long-term debt is only increased to 920. So that means the difference between the 1,030 million and the 920, which is 110 million, we can rationalize that this amount was actually paid off. That is why the amount of long-term debt was reduced by this amount. Okay? All right. This was the last part of this exercise, I think. Yes, part F. So I hope that you found this video useful. This is how you can go about solving problem number 7. If you have any questions, please feel free to drop them down in the comments. And until I see you in the following exercise or problem tutorial, I hope you guys have a good one. Take care.